Hi guys, welcome back to Swero TV. I'm Lotak Pata, your usual host. So welcome back to Basic Accounting for Business Leaders. We have just ended a tax series. If you haven't actually watched it, where we were actually just explaining a few taxes for you so that you can understand the basic taxes that you will affect your business. There are many other taxes, like I've mentioned in the previous video, that will affect your business, but they are more specialized as well. They're not as simple to explain to you. So if you do need help with other taxes as well, please feel free to contact us. Just throw a DM or just throw me an email as well. All those details are on the Facebook page, or just throw me a DM and write a comment. Kindly contact me, or can you kindly just contact us. All right, so just a disclaimer, this is just basic accounting for small businesses, for business leaders, to just understand what accountants are doing, and also just to understand when you are actually given your financial statements, or your accountant says to you, you need to pay taxes. What does that mean? What does this mean? When they give you financial statements or they give you your monthly management accounts, you need to understand what they're giving you, and at least have basics of understanding what they're giving you, and as well as what does what mean. Okay, so it's super important that every single time an accountant actually gives you financial statements or gives you management account, there have to be a meeting between you, the business owner, and your accountant on interpretation of those, and what does this mean for my business? How can I grow my business further? What does this mean? Why am I not making profits? And if I'm making so much profits, how does it affect me tax-wise as well? How can we do better tax planning as well? Those are the conversations that you need to be having with your accountant once they present to you these financial statements, and you will be able to also see whether your business not only growing profitably but in value as well. This is where the balance sheet comes in. So for the next couple of weeks, I will be explaining interpretation of financial statements or even management accounts. What are management accounts? Management accounts, those are just the monthly accounts that your accountant will be making for you. That will just probably be your income statement, your cash flow statement, as well as your balance sheet. Those should also have an explanation of what does it mean, interpretation of what they have just presented to you. You should also be having a monthly meeting with your accountant to actually understand how your business is doing, like I have mentioned already. Okay, if you do not do your books monthly but you do your books yearly, once the accountant is done with your financial statements, have that meeting with the accountant to understand what this means and what does it mean for your business, and how can you take it further to make your business better, whichever areas they are of concern. Okay, very important to have an accountant as your business person inside. That is your, what you call your back office people, the people that have the backbone of the business, and while you are running with your creativity on growing the business, those people hold you together. The accountants hold you together in ensuring that you're not pushing it too far. As sometimes as a business leader, as an operational person, or as a creative person for the business, you can push it a little bit far. That's what accountants do. They ground you a bit in ensuring that you don't take it too far. There's a limit, or we're going too far with our expenditure, or we can't afford to do that. They can also help you and say we need to be making savings as a backup plan for future endeavors, etc., etc. Okay, these are things that we'll be discussing as the episodes go, as well as how can one plan as a business to make a backup plan for the business, for example, financially as well, where especially during COVID, as it's right now, it has happened, the businesses have been hit hard. What is a plan that businesses can do to prepare for the future, so they don't become as badly hit as now? What can you do? These are things we're also going to be discussing. I will be inviting experts here and there to make business decisions right now during COVID, as well as going forward. What is the best way to actually have a backup plan for your business? But today we're going to be discussing income statement, a part of the income statement. I will also continue it into the next episode. This is interpretation of the income statement, questions to ask your accountant, and what the income statement does it mean, and the structure of it, what does it mean if it's like this, what can you ask, etc. And when I'm looking at this, what does this mean for my business, basically on the income statement. There are other parts as well on the financial statements that we'll be discussing as well as the weeks go by. All right, so today let's start today's episode of income statement, how to interpret an income statement when it's being presented to you. So the very first thing that you look when you're actually looking at an income statement presented to you by your accountant, the very first thing that you will see will be sales. On your income statement will be written sales or revenue or income received. It will be written there, the very first thing at the top. That is exactly what it will be. What does that mean? That means, I think I've also explained to you the difference between money received into your bank account and actually money that you've actually invoiced your customers. That is money invoiced to your customers. Okay, whether you've received that money through into your pocket or into the bank account directly or not, it doesn't matter. It is still a sale. Okay, invoicing is a sale whether you've received money or not. So now if you look at your income statement and then there's 1.2 million that says you as whatever your company is, or as where we've made 1.2 million for the year. What does that mean? It means you have sold or you've invoiced a total of 1.2 million. All right, so now if that doesn't make sense to you, or it doesn't add up, you can actually ask your accountant, could you kindly break down this sales figure for me? I don't understand how I've made 1.2 million. Can you break it down for me? And they will tell you that these are the invoices that you've invoiced to your customers. This is what information that you have given me. And most of the time, accountants, when they do the work, that will be information that will be given to them by the business owner or by whoever is in charge of sales or in charge of whatever. We will be asking for invoices that you've actually invoiced to your customers for us to establish the revenue that you will have made. That will be on your income statement. Okay. So now ask them, can you kindly break down this 1.2 million for me? They will break it down for you. How are they going to break it down for you? They will actually list all the invoices that you've given them, or all the invoices that they have recorded as part of your sales. So you then can look at them and say, no, you know what, this customer, because it does happen that you've actually invoiced the customer and this customer hasn't paid, or this customer is never going to pay you because you've never done the job, or the job was cancelled altogether, but you forgot. It can happen that you've actually forgot you've invoiced that customer and the work never happened. What happens in that is that you actually just tell your accountant, this customer, no, non-existent actually, because the job never materialized. So then they will then issue what you call a debit order and actually remove that from the books. Okay, because that's a sale that was not realized in accounting terms. Okay, so basically that's what will happen with the sales revenue. You can ask for that. Now after the sales revenue, there's sometimes what you call income received. Okay, under income received, just after the sales, will be other income, not income received, but other income. What could be the other income? Other income could be your let me see, interest received. Maybe you've actually made investments for your business. Now you've received the income. So once the income gets received, or maybe you've opened a bank account that actually also receives interest. Like for example, when you are a business, you can actually open a call account for your business, and once you've opened a call account, sometimes it earns interest. So once it has earned that interest, we are going to record that as income received. So that income received will actually now land under other income, apart from the sales revenues. Okay, what other income can you actually earn? Sometimes when you are actually dealing with international companies as your suppliers, we have to record those international transactions, particularly, let's say an invoice was on ZAR or it was on Great British Pound. We have to record it as Great British Pound as compared to and interpret it into pulas through the exchange rate. So when that happens, because the exchange rates actually fluctuate every single day, so what happens with that, we also have to account for that fluctuation of the currencies were at that particular time that you've transacted with that particular company. So then what will happen there, then we will have to record whether you had an exchange gain or an exchange loss. If it's an exchange loss, then you will actually record it as an expense. If it's a gain, it's going to be your income received. Okay, so basically that's the part that I wanted to explain to you on the income statement, where there is revenue and then there is sales revenue. What does it mean, and how can you get an explanation for it, as well as other income that you've actually received. What could that be made out of? You can also actually, we are free to ask your accountant, could you kindly break down that income receipt, other income that we've actually received? Break it down for me and tell me what other income have we actually received. Okay, so the next time we're actually going to record on the next episode, we're actually going to be talking about the other part of the income statement, which is called the cost of sales or cost of goods sold. All right, on the income statement there is the sales, the other income or other sales, and as well as the cost of goods sold. What does the cost of goods sold mean? That will actually produce what you call a gross profit. So that's what we will actually that's what we're actually going to discuss on the next episode. I hope this is clear for you, and bye for now, and just DM me any questions if you actually have any questions for this episode, of whatever questions that you have. All right, bye bye for now.